Today's episode of the Energy Newsbeat podcast is brought to you by Inveris. The energy industry faces massive challenges every day, and the events over the last 2 years have caused huge disruptions like never before. Companies in the energy industry need actionable intelligence and a single source of truth that brings all the data together. Inveris is the energy specialized technology partner that provides intelligent connections for a global energy ecosystem. Only Inveris has the analytics, people, experience, and industry scope to connect the right data and information in the right way to discover missed opportunities and deliver fast outcomes. Find out more at Inveris.com. That's ENVERUS.com.
Hey everybody, welcome. Today is another fantastic day because I get to have a podcast and a great discussion. My name's Stu Turley, President and CEO of the Sandstone Group, and I'm here with Steve Blackwell. He is the CEO and managing partner for Invito Energy. Welcome. Thank you for being here.
Thank you, Stu. It's a pleasure to be here. Thank you for inviting me.
Hey, Steve, I'm a little inside baseball for both of our fans, and that is that I really enjoyed getting to talk to you about industry stuff over the last month or so, and it's really a lot of fun. You just were at a family office investing that you were invited to speak at. What was that like for you?
Yeah, I was here in Dallas. They hold events around it's a group called the Family Office Forum, and they had a investment kind of 2-day investment panel that went on this past week. And so I got invited and sat on a panel when we got to the topic of the energy industry. And so it was myself along with 2 other folks, and it was a good time. A lot of family offices in the room and online. Right. Everybody's obviously kind of interested in paying attention a lot more to the energy sector, specifically with where the markets have been this year and where commodity prices are at. So it was a good opportunity to share kind of with that family office environment or market, some insight on the oil and gas business.
What were some of your big topics?
Yeah, obviously one of them was, obviously commodity prices, right? Everybody wants to know what the kind of outlook is for commodity prices. And then, of course, from the family office perspective, it's kind of what are the investment opportunities, right, for private capital, which is beginning to fill that gap that has kind of been a void in capital over the last few years as a lot of the capital has moved out of the space. And of course, the topic always eventually ends up onto ESG, and kind of what are our views on, the ESG movement, and especially from an environmental standpoint. So those are the 3 main areas.
Well, with BlackRock losing, was it a bunch of money, trillion, 1.7 trillion in the first half of this year. They got blindsided by the ESG funding. And so what I'm seeing is that there's a lightening up of the ESG. People are now going, hey, I got to make profit. And with the Biden administration coming out with the Inflation Reduction Act, they snuck in nuclear and natural gas into there saying, oh, we got to have these in order to do ESG. So, try to get there. So I'm seeing investors in a different light trying to say, hey, wait a minute, I might as well be able to invest in it. Did they have anybody come up and say, I invested in BlackRock, now do I need an alternative investment?
Yeah, nobody specifically brought up the BlackRock issue. I think, though, the general theme is, look, at the end of the day, people are looking for returns. And if there's alternatives, I guess, to get your returns that maybe are perceived to be more ESG friendly, maybe they would look at those. But obviously, with where the markets have been, the performance of the S&P and the NASDAQ this year, people are looking for alternative investments. And I think from an ESG standpoint, they really just want to understand that you're not ignoring it, and are you being responsible, especially from an environmental standpoint, right?
Right.
What are you doing to address it from a socially responsible or environmentally responsible mandate? Which, from my perspective, the oil and gas business, ESG has been around. The funny part of it is ESG has been around forever, especially environmental. Now the definition has changed a little bit or has been hijacked, but The oil and gas business, from my perspective, has always taken the environmental side of the business serious.
Right.
And we continue to do so. And, a lot of innovation has come along even in the recent years to make us more efficient at,
Right.
especially on the methane side. I think it's, when they bring the subject up, your response can't be, yeah, we don't pay attention to that.
Right.
But they want to hear some responsibility on your end, just to make sure. It's kind of like checking the box.
But you know what's fun, Steve, is when I'm excited about the majors, social and the governance piece. The governance is really come on strong with the commitment for the big boys to give money back to the investors. There's a transition, and maybe that's helping a little bit. But people need to understand that 50% of the oil that we generate is by the privately held. So now you have the big boys giving back so much money. It's driving everybody nuts. And even President Biden was talking about windfall profit taxes. And all that's going to do is just shoot everybody in the foot.
Oh, man. I mean, the windfall profit tax, I don't even want to go there, right? I mean,
but
if you've been in the industry, especially, and you've been around a while, right? Does everybody forget the pain this industry was going through? From basically 2014 through 2020, even pre-COVID, and then of course COVID. This industry had a mass change of bankruptcies, lost tons of employees. Nobody was looking at us with any sympathy at the time. And then when the market's going well for us, they want to point the finger at us. A little disingenuous in my part, but it's politics, so I get it.
But I think here's the cool thing is that when you take a look at the Exxon and the Chevron CEOs, they were kicking back and saying, both of these things can be true. We can give more back to our investors and increase production. And I think that that's great that we're finally standing up in the industry to give more money back to the investors. That to me is one of the good things that came out of ESG. Don't you think?
Yeah, I mean, I think the industry, right? We had the shale revolution, which basically started maybe about 06, 07.
Right.
And for about a decade, it was drill, baby, drill. Everybody remembers the term drill, baby, drill.
Right.
And the big public equity markets or the equity E&P companies really were being rewarded for growth. So build reserves with the promise that someday that would translate to cash flow that you could return to shareholders. It was probably around 2015, 16 when the street woke up and said to the E&P private public companies, look, your model doesn't work. We've heard for a decade it was going to lead to this, and it's not. You're just burning capital. So part of it was the industry itself in terms of performance, right? I mean, at the end of the day, imagine this from a business standpoint, you need to make money. You need to drive profits. You need to drive cash flow. You need to be able to return that to shareholders. And that's what shareholders want. And that's the primary responsibility of CEOs or boards of public companies.
Right.
So that shift was painful. A lot of companies went out of business. Capital moved away from the market. I think the S&P 500, I mean, you go back to 2006, I think the S&P 500 was about 9-10% public equities. And today, pre-COVID, it was about 2.5%. So I think we're back up to around 4%. So the market's turning back towards the energy industry. But a lot of it was self-inflicted, and ESG contributed to it. But now where are we at, right? I mean, the public equities and E&P are performing. They have good, dividends, good yields. They're returning cash to their clients, and I think, and they're being rewarded for it to some degree in their stock prices. So if you're a CEO and you reverse trend and you go back the opposite way and just try to build production to appease an administration, you're going to get hammered on the stock side. So I think the industry has learned its lesson, and financial discipline. It's no longer drill, baby, drill. It's distribution, baby, distribution. If you're a public E&P.
I like that, Steve. Distribution.
Yeah, you got to give money back to your shareholders. Imagine that.
But that it is a nice fiscal responsibility that has come around on that. On your experience, Steve, when I talked to you, just like a lot of my other friends and CEOs, you mentioned oil, poof, you suddenly your physical change, because you're talking about deals, you're talking about getting these things, and getting low cost energy to the US is important. And it's nice that you're part of that.
Yeah, I mean, look, that's the S part of ESG, right? The social. And again, when I said ESG was hijacked or redefined, the S is what was redefined, right? So there are leaders in the industry that the CEO of Liberty Energy is great at this and always has been, Chris Wright. But
Isn't he great?
yeah, he's awesome. So I mean, I've never, from my own personal perspective, in terms of what I do and what I do for work and every day, is we feel good about what we do, because we realize that from a social impact, there's still 2 billion people around the planet that cook with biofuels, which is wood and dung. I mean, there's another 1.5 billion people who still have no reliable sources of energy, let alone affordable energy, right? So, when we have the meetings in Davos where they're going to go talk about climate change and CO2, that's really a first world problem, right? I mean, because there's billions of people around the planet that have absolutely no access to energy. So, and I think, I've said this to many people, like maybe next to the discovery of fire and the round wheel, the discovery of hydrocarbons has changed humanity and advanced humanity probably more than any other than maybe those two discoveries in the history of humankind. I think the discovery of hydrocarbons has probably advanced humanity more than any other discovery. And we forget that. And unfortunately, the industry gets demonized unjustly.
Chris Wright is such a cool cat. When he is he, just like you talking to oil and gas, he gets up there and talks about elevating poverty, people out of poverty through consistent low cost energy.
Yeah.
And I love that about Chris. And when you sit back and back up just a hair, the first world countries are imposing their belief on renewables on Africa and other countries like that. We got here by low cost carbon. Why shouldn't we let them elevate themselves out? I mean, it just doesn't make sense to me on that, but
that's exactly what I'm talking about, right? I mean, my wife goes to Sierra Leone on mission trips. She's probably been about 4 or 5 times. And, look, when she comes back and shows the pictures to me of what it's like down there, I mean, it's unbelievable that exists in the 21st century, right? They have no running, they have no sewage, they have no running water, they have no electricity. They have some places have generators. I mean, and that's in the 21st century of today, that large populations of people are living like this, and the quality of their lives would change dramatically if they had access to a reliable and affordable energy. There's no question about it.
What just really kind of gets me all worked up is this morning I had somebody send me a note, and I've known this for a long time, but 70% of the oil that is generated out of the rainforest is consumed by Californians. And just talk about ESG.
I did not know that.
Oh, it's horrible, Steve. And China, try this one on. The Chinese own the oil companies that are taking advantage of the rainforest. So they're having I believe it's Ecuador is having to allow the Chinese to come in and strip the rainforest and then export Chinese oil and diesel and air fuel to California. I'm like, there's some hypocrisy right there. I mean, US does it so much better for our great US E&P operators, both private and majors will go out and do it according to ESG standards so much better than the rest of the world.
Yeah, well, that's why it makes no sense, right? If you want to go, the current administration wants to go ask other countries to give us, oil when we're the ones that do it the cleanest, right?
Yeah, and yesterday Biden says he wants to do the windfall profit tax. We just talked about that a second ago.
Yeah.
But he went back and said, I've given all of the oil companies, they've not had any problems doing it. And so he basically, he's cut the hands of the thing. But anyway, let's leave that alone there. What do you see coming around the corner? We're going to need all the oil we can produce. And what do you think are some of the things in the US that we can do? Find the right spot, find the right play. What are things that you're focusing on? That's the OSU way to talk, Steve. Focusing on to help your part in trying to get more oil, low cost energy to the US market.
Well, I mean, look, for a smaller company, right, from a discovery standpoint, right, it just kind of to back up on your question, right, the capex budgets for the energy industry from 2015 forward have decreased by like 25%, right? COVID from 2020 from 19 to 20, it dropped by 50%. Yeah, but they're still down 25%. But the bigger portion of that which is what part of those budgets historically were for new discoveries, which was about 25% historically. CapEx budgets for E&P were about 25% for new discoveries. That's down to about 10%. So you go look at 2019, I think we had 16 billion BOE equivalent of new discoveries across the world, not the United States, but across the globe. And in 2022 so far, that's only 4. So we definitely need the majors and we need the bigger companies that have the resources to look for new discoveries. Of course, we also have we also need the independent geologists, the independent guys that are going out and looking for new discoveries as well. Invito Energy Partners, specifically for what we do, because we run really more like a drilling fund. We're definitely not engaged on the exploration side. So, our role in it really is to go into areas where we know the hydrocarbons are there. Maybe they've been stranded, use the new technologies and pull them out of the ground in an efficient, cost-effective manner and get those to the market. So I'd say that's the portion that Invito specifically plays. But from a supply side, not only domestically, but globally, it's very bearish, in my opinion, on the supply side going forward for the next few years. Because there just has been a large amount of capital pulled out of the industry. Mm-hmm. And even of that capital, it is less going towards new discoveries. So that's very bullish for commodity prices, but that's bearish on the supply side. So that's, in my opinion, that's where I see kind of the macro structural issue in the energy space today, not only domestically, but across the globe.
One of the things that, we talk about is wildcatting is pretty much a thing of the past in so many of the fields, because you take a look at the wells that are out there, you take a look at the production for the last X number of years, and you got a really good idea of the formation and everything else. You're not doing any wildcatting. I mean, wildcatting is gone from most people's vocabulary.
It's definitely gone from our vocabulary. That the way we're set up and the way we're structured. Right. There are still guys out there doing it. There are definitely still, especially on the smaller independent side, there are still guys that'll do the conventional reservoir drilling, which you could classify as more on the exploratory wildcatting side. Of course, offshore, right? I mean, again, this is where you need the majors, right? Looking for offshore discoveries, because when you discover, a field offshore that's, billions of barrels of oil or natural gas, but of course that takes massive amounts of capital. So no small independents are going to be doing, exploratory offshore drilling. So, yeah, it definitely is on our side. We are more focused on the resource, kind of using modern day technologies to go into areas where it's not a question anymore of the hydrocarbons are there. It's just a matter of how efficiently you can pull them up out of the ground.
Excuse me.
Yeah.
I think I swallowed a bug, it's kind of like on a motorcycle or something, but
Yeah, that happens down in the south.
all right. You've got some things going on right now. How do people get a hold of you if they're interested in finding out your opinions and your thought leadership in the oil and gas space?
Yeah, I mean, you can follow us on LinkedIn or follow me personally on LinkedIn. Of course, our website is invitoep.com. And you can, get a kind of a feel for what we see, how we see the industry, especially on LinkedIn. And of course, then, if anybody's interested in what we're doing or the investment opportunities, because that's part of why we started Invito Energy Partners was we felt that there was a need in the market for putting an investment fund out there for direct investment that kind of aligned the sponsor and the investor, and were structured in a proper manner to give the best chance of performance. So, our team's we got a nice technical background. Team's been together a while. So yeah, that's what we're doing. We're excited about it. We're a new company, so someone's always got to start somewhere. But we're really passionate about the space. We like being in the energy business, and feel good about what we do, and feel good about what we offer to the market, and feel very bullish about oil and gas from an investment standpoint going forward. To be quite honest, I think the macro issues from a structural standpoint in energy, so much capital has been pulled out. If you're in this industry, you know how capital intensive it is. Right. And there has been a lot of consolidation, and then there has been a lot of capital pulled out, one for performance, two for ESG issues. And that lack of capital and reinvestment, from my perspective, and many others, I'm not the only person that views it this way, that there's a lot of downward pressure on the supply side going forward. And from a demand side, the world is still projected to grow from a demand side over the next 10 years, even with the advent of electric vehicles and alternatives. Hydrocarbons are still, produce 80% of the energy across the globe. Alternatives are what, or renewables are what, 6%. The crazy part about that stat, of that 6%, 4% of that's biofuels. So only 2% of that is wind and solar. And of course, hydro I think is around 20%, but in that range. So
let's not talk biofuels, because ethanol is such a waste of food, and it's not good for your cars, in my opinion. I think it was a big mistake, but that's just my personal opinion. So, well,
that's shared by a lot of folks.
Well, I'll tell you what, Steve, thank you for stopping by the podcast today. All of your information is going to be in the show notes, and we'll be getting this out very quickly. Thank you, and look forward to speaking to you again.